Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show. Hey traders, let's take a moment to
Hey everybody, welcome back to another live stream. We are back on the show, taking a look at markets and jumping into the action. A little bit of a rebound in the stock world. Indices are trading up this morning again. Let's take a quick look at the dollar. I know the dollar actually, holding its own despite some of the weakness that we've had recently. But in these streams, if you're newer around here, what we do is we go through several charts. We talk about setups, ideas, and everything. And we find ideas. We're mostly swing traders, but we also have some day traders in the audience as well. We got a good mix here, and we're going to jump right in here. So first of all, let's take a look at where we usually start the streams, which is the dollar index. I've been vocal. I still think the dollar index is trending up to the upside, of course, as we pull back here. 106 being broken this morning, but still in what I would say is a healthy overall upward trend. Price is pulling back. And if we take a look at something like the 4-hour chart, you can kind of see that we're sitting just around levels of support looking left. Now, a big level of support being around that 105.66 level. And I do actually have a dog in the fight here. I actually am long dollar JPY here at this time. And I've got a trade that's working well. We called this out last night on the Asian session. I spotted a setup that I liked on the dollar yen as price pulled back. I really liked the way this candle wicked off of the bottom, and I went ahead and picked it up on the long side following that close. So basically, my thought process with this, I'll just show you guys the trade alert so we can go through it there. Give me 1 second to pull that up. So let's see, dollar JPY. Here we go. So I mentioned that I bought dollar yen last night around 8:45 p.m. US Eastern. I initially was risking 65 pips, and my analysis was basically a bullish uptrend, as I just mentioned, on the 4-hour and the daily chart. And I put my stop loss below the lows of this candle spike. So we saw price spike down into this area of support, and buyers grabbed this area up pretty quick. And so I liked the way price action was forming. So I went ahead and went long myself. So a couple things here to think about why I was bullish bias, not just a nice chart moving to the upside. That is, of course, one of the reasons. But on top of that, I also really like that economic data favors the US dollar, generally speaking. I'll show you some of that in just a moment. And then seasonal trends suggest some bullishness during this month, as well as the commitment of traders data, which shows heavy bullishness on the dollar over the Japanese yen. So I like to show these streams or start these streams usually by showing personal trades, things that I'm in, what I'm bullish, what I'm bearish on. So that is where I'm at. I am bullish dollar yen, and I want to show you some stuff here. Where are we getting bullish here? What is the reason behind this bullishness on dollar JPY? Well, the commitment of traders data is giving us a big score boost, and I'll show you this. We'll break this down. By the way, if you're an EDGEFINDER user, we've been doing some cosmetic tweaks. I think if you're playing around on the scanners pages, we've got some nice improvements that we've worked really hard to put together for you. So if you're an EDGEFINDER user, head over to the scanners pages and also check out the new fundamental analysis scanner pages. We have been working overtime to improve the cosmetic use of the EDGEFINDER just to make it a little easier to read. Anyways, the commitment of traders data, let's break this down. Why is the COT data so bullish dollar JPY? Well, here's why. You can see on top of the US dollar being a really heavy long position overall. 75% of contracts open on the COT data show bullishness for USD. And if you take a look at Japanese yen, we get 77% of institutional positions are on the short side. So that's pretty obvious. But then take a look at the latest change, guys. This column matters a lot too. And if you're an EDGEFINDER user, I want to explain the importance to this new scoring change that we've made on the COT data segment of the EDGEFINDER. If you're an EDGEFINDER user, if you're a real EDGEFINDER fan, you should probably know the under the hood mechanisms to how this stuff works. So we score based on all three of these columns. This latest column, or the recent change column, shows us, as of recently, are institutional traders building a bigger position or offloading a position? Well, take a look at this. Dollar, we saw a big increase, and yen, we saw a mild decrease in positioning. What I mean by that is bullish moves in the dollar, bearish moves in the yen, on top of an already very strong long to short ratio. I really like dollar yen for this purpose. The COT data gives us a nice +3, but that's not where we end the bullish thesis here. We also have really strong economic numbers out of the US when comparing them to Japan. And so that's very nice. And on top of that, finally, we have seasonal data and retail sentiment. Retail traders are short dollar yen. So I want to be more on the minority of that. If we know amateur traders are losing money, we want to be on the opposite side of that in most cases. Not always, but in many cases. Finally, take a look at the month of October, which is historically bullish for the dollar JPY. All of these things said, I took a trade long yesterday using the EDGEFINDER, and I alerted it inside of the group. And if you're not already in the Discord, let me just do a quick plug for the free Discord channel. If you're not in the free Discord, we've got a link dropped in the chat right now that will allow you to join for free to get access to some of our daily analysis, trading tips, video coverage, all sorts of good stuff. So if you want to stay connected with us, feel free to do so by joining our free Discord channel dropped in the chat right now. It's also in the description if you are watching this at a later date or later time. So yeah, join us inside of that. Stream is laggy. Anybody's stream laggy? Please let me know if there's some technical difficulties or if that is just Nima having some issues loading the stream. Anyways, so again, I've got a dollar yen position open. I'm long. My thought process on this is that if price does break underneath the lows, then I will stop out. And if it continues, I will look to trail stops into profit, especially if we're able to get up to this 149.42 level. That's probably where I'll look to start to secure some profits on the trade. Tim says no lag. Thank you, Tim, for that. Okay, just making sure. Appreciate you guys giving us that feedback. Sometimes from the streamer's perspective or from our end, we can't always tell if there's audio issues or video issues. But sometimes when somebody chats that, hey, I'm having issues, it's hard for us to tell until we ask. So thank you guys. All right, let's keep going. I want to talk a little about gold here. Gold, guys, continues to have some serious pressures, both in fundamental and technical variations. You're seeing a lot of traders get bullish on gold. And here's the thing. Actually, I should take that back. Retail traders have been just destroyed by gold in the last few weeks. And I don't say that joyfully or callously. I just genuinely, the issue is usually when you have a market trending lower, what happens is retail traders are typically on the wrong side of those moves. It's just the unfortunate nature of the markets. So many traders are probably wondering, hey, are we starting to bottom out here for gold? Is gold due for a bigger reversal? And despite seeing some good support around 1820, 1815 in that range, and seeing a bounce here, I have to be very cautious once we start getting up into areas like 1879 and 1895, where we have serious resistance overhead, and where I think, dollar bullishness, which I'm still, kind of partial to. I think we stay, kind of a short-term ceiling on gold. Now, if I'm wrong about that and price completely breaks out, then perhaps there is a new trend. And in that case, I'll maybe start to look bullish. If something changes in the data, if something changes in the CPI report this week, PPI, we have data coming out this week that could turn the tides. And I'm not a fortune teller. I say this often, but profitable traders are not fortune tellers and wizards and sorcerers. Profitable trading is educated guesses. So based on what we have in front of us, US dollar strength still looks to be the dominant story. And that's where I'm looking to be positioned until something changes. Speaking of something that could change it, again, we have the consumer price index, which is a very, very highly anticipated measurement of inflation that will come out this week, as well as the producer price index, both of them very important to markets. And if that changes the story on the dollar, then so be it. Maybe we'll adjust. But again, traders make educated guesses. They don't make fortune telling, predictions about the world's next moves, right? Again, very difficult to predict in this world. What's best, in my opinion, is to react and risk accordingly. Anyways, in terms of other setups, so gold, is there a trade at this level? For me, no, not really. If we do start to poke up into this area, again, there may be opportunities to be more short biased unless we just get a rock star CPI data number. If we get, cooling numbers out of the US, that is likely to suppress the Fed's willingness to raise rates or keep rates elevated. So we will watch CPI for more clarity on the gold side of things. In terms of stock market stuff, I'm watching these indices closely. It seems like we've come up to a level of resistance. And the question will be, can we actually break through? And again, I've mentioned this yesterday on stream. We need to see what that CPI and PPI number do, because if we get a breakout here, we very well may have the early signs of a reversal in the indices finally. So I'm watching that. I'm watching this. I'm watching gold for possible reversals as we go into this week. Again, I mentioned which trades am I in. I am currently long dollar yen, cautiously, tentatively ahead of CPI. I'm in a profitable position. My stop loss has been trimmed already, and my goal is to hold on to this trade. And if I make any changes to that, again, you guys will see it inside of the Discord channel. By the way, while we're speaking, if you guys would like access to the premium version of the Discord, where you can see the trades being shared by Frank and myself, consider joining the VIP version. And if you'd like more information about that, if you'd like to find out more about what we offer inside of the VIP group, again, that includes the trade alerts being shared, so on and so forth, you can send us a direct message using this link right now. Now, if you're watching at a later point, I know a lot of people watch these streams back hours after they finish. Please feel free to click the links down below in the description to have a conversation with someone on our staff. If you message us about getting access to a membership, if you're serious, if you'd like to join us inside of the group, here's what you can do. Click that link, and when you do so, you'll be connected with someone on our staff to get yourself set up with a membership. Click chat now, click VIP signals, 15% discount, and you'll be connected with someone on our team who, like I said, will connect you with some really good stream perks. If you're somebody watching live with us, you get some extra discounts because you are a stream supporter, and we do appreciate you. All right, so let's see. What else can we dive into here? In a few minutes, we're going to have Frank and Tom come to join us in terms of setups. I want to also talk about another really hot market right now, which is the oil market. With everything happening over in Israel right now, again, a very tough and hard to hear news. The markets, in terms of just a market perspective, it's been causing some big moves. Oil jumped off of this after concerns around potential escalation in wartime. And also, here's a chart that might be interesting to you guys. I know not everybody here is a stock trader, but here's Lockheed Martin, which is, of course, an aerospace and defense company in the United States. You can see it caught a really strong bounce following this stuff. And again, this just shows the markets are kind of poised for possible escalation in that region, and not obviously something any of us wants, because war is awful and a terrible thing. But just from purely a market standpoint, it does seem like risk concern in that area is causing some markets to move. We saw a bid up on gold for that, so perhaps some short-term momentum to the upside for gold on that. But again, I still think if you look historically, what tends to happen around wartime and invasions, it does cause usually a short-term concern in markets, but usually the market kind of brushes it off shortly after. And like I said, I do not mean to say that in any sort of callous way. I'm not saying that is something that you would trade and try and profit off of. But if you just look at purely what generally tends to happen during invasions, during concerns, during wartime, yes, there's usually an initial fear around the event, but markets seem to normalize following that pretty quickly. So it's a weird concept to talk about how such terrible things can impact markets. But again, as traders, we're not sometimes you just have to be purely kind of what's going to happen in what scenarios. Let's take a look in terms of also indices. Like I said, trading trading up off of the lows, and ask the question, are we finally starting to see another bottom in the stock market as we enter into what is historically some of the strongest points of the year? Q4 typically seeing, I think it was like in the last 50 or something years, like 80% of the time the stock market continues higher during Q4 over that 3-month stretch. So it'll be interesting to see if that does in fact play out seasonally again. And just to complement what I'm saying there, we do have the data for you. So I'll show you guys some of this. And then again, after that, we'll go to Frank and Tom to go through some technical setups as well. But again, I think that understanding, how markets react to various events and various times is something that can be repeatable and can be very valuable information to consider in your trading. So here's the S&P 500's seasonal historical bias. You can see in the last 10 years, October is kind of flat. And then we go into November and December, which are both historically very strong for the S&P 500. So that's something for you to think about. This is seasonal data available on the EDGEFINDER. You just go to the seasonal trends. If you already have a copy of the EDGEFINDER, just click seasonal trends and you can take a look at any asset and pair and see how month to month it historically tends to do. And you can see it's been very accurate this year. The white line represents what it has done this year relative to historically what expectations have been. It's actually been almost perfect this year in terms of purely an up-down directional bias on the EDGEFINDER seasonality. So really cool data there. Anyways, guys, we're going to go to Frank and Tom in just a moment to talk technical setups right after this quick break, thanking our sponsors. We'll be back in just a second.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, we are back with Tom and Frank to take a look at some markets. Hey Tom, how you doing?
Yeah, good, thanks Nick. Morning Frank. Yeah, very well. You guys?
Doing well.
Doing good. And Frank, of course, good to also have you back on the show. I want to jump into some charts with you guys. I've been talking a lot about macro stuff, of course, the situation over in the Middle East, as well as the CPI and PPI stuff that is coming out this week, which is likely to cause market moves. But Tom, I want to go to you in terms of setups here first. What's on your radar in the currency world, indices world? What are you watching?
Well, just to look at the US dollar as a general currency on its own. If you look at a lot of these day charts are on the brink of, potentially a daily structure break. Some have even broken. So Euro US dollar, if you look at the weekly chart, most of us have, pinpointed this as a nice support level on the weekly chart. And then if we drop down to the day chart, it's on the brink of potentially, a daily break. So, this is one idea of US dollar. If we see a break here, I'll be all over buying this basically, guys. But I need to see a break of that daily structure. And this is not the only one, guys. Pound US dollar is very similar. We're at a last daily high. It'll be really interesting to see what price on US dollar does at all these levels. If it breaks, I'm buying it, and if we get a bearish reaction here, then potentially we could sell it. So, but one interestingly, US dollar Swiss franc, this was potentially a trade we were looking at today to sell it, because this is one US dollar pair that has broken down. We're seeing a sort of double top and a break of these lows with this candle here. And I think we've got some room back down to this support level. So just US dollar majors in general are at really interesting levels. And like I say, with PPI coming up, it'll be interesting to see, if we do get that break of daily structure or not.
Sure. Yeah, and of course, likely what would cause a continued push to the downside in the dollar Swiss would be cooling inflationary numbers, which is kind of what is semi-expected going into this week. I'll come to Frank now. In terms of CPI and producer price index, both really key inflationary numbers. How are you prepping for this upcoming report? Do you have any trades on? Give us just your rundown, Frank.
Right. So I still have my S&P open from last week. That was based off of NFP expectations.
And by the way, that's a huge trade, Frank. You should be proud you caught that, because that was a really nice bounce. So you're long S&P 500 as it continues to find a bottom.
Yeah, that was a fortunate buy. And I think just this week's expectations of lower CPI month over month and producer prices cooling, that's also fueling, I guess, this sort of uptrend we have right now. But I also wanted to point out this chart here where we see stubborn inflation on month over month in the past couple months, and then last report was much higher than we had before. So it doesn't necessarily suggest that inflation is cooling. I know we saw cooler wages, but based off this chart, it looks like, inflation is going higher, and expectations are the same as last month at 0.6%. But, we have to be prepared for both scenarios. Like, what if we see it higher than 0.6? If it's lower than that, then that's good. It just shows signs of cooling and good for indices, gold. But, I think going into the week or into this news, that having a bullish bias on the indices was pretty good. It ended up working out, but it can always, the report can come in and suggest something else. Core for both of these are the same. They're usually unchanged or higher than expected. So it's hard to tell on the inflation side. We'll just have to see tomorrow and Thursday. But I have a couple things I'm looking at. One of them being GU. I think if you want to look at this both ways, you either take a short now and see if you can ride it back to the lows, or you wait on that structure break that Tom was talking about and see it come up to this trend line. It doesn't look like there's much upside yet, and until we establish a higher high, I would be more confident in going long, especially because I think I can't tell if I'm just ready for the dollar to be weaker or if I'm just speculating. But I want to see the indices come back up, and with that, you'll see GU and EU, AU all start to rise, and hopefully gold too, because that's been beaten down for a couple months. So yeah, that's what I'm looking at.
Yeah, and just to add to that, Frank, in terms of, I'm totally, I'm not even trying to hide it. I would love a weaker dollar, because a weaker dollar would finally give us some relief on things like gold and indices, which are some of my favorite trades. We've seen the yields world continue to be red hot overall, and that has been kind of a persistent pressure on the dollar. Tom, in terms of coming into the CPI number, which markets would you say you're most interested in watching going into the report? And is there anything that you're watching for specifically that would kind of trigger a trade for you? Like, for example, for me, when it comes to the indices, if we get a rock star inflationary number, I will meaning cooler than expected and finally get some dollar relief, I'll probably be looking to start finding some indices trades. That would be like kind of my game plan, I guess, going into one of CPI's numbers. If it stays hot, I'll continue to play the dollar yen on the long side. But that's kind of my general game plan. What do you think, Tom? What's most pressing based on possible volatility we get tomorrow?
Yeah, well, again, not to go back to the same thing, but the US dollar pairs, if they start breaking these levels, like yourself, is if you just look at how bearish that dollar's been, how strong the dollar's been, it's due some weakness, and like Frank said, I don't know if I want weakness or the market's just due some weakness, but if these daily levels break, then these US dollar pairs, I will be, buying euro US dollar, pound US dollar. So I'll be keeping a keen eye on them. Indices, not so much, but what is interesting are the yen pairs, and answers on a postcard how to trade these at the moment, because if you look at the weekly chart, we've had a massive swing lower and just a massive push up. And, is this yen weakness to continue and, indices start to push up? Or, on the day chart, I'm seeing clear selling zones. This daily chart, we broke down this level. We're back at these highs. This is potentially a good selling level. So with the yen pairs, this CPI data might, push these one way or the other. Yeah, because we've got daily selling pressure. We're in a daily downtrend, and we've got this weekly, buying pressure. So, these yen pairs have become untradeable for me. So I would like, the data. Sometimes we need the news to push some of these charts out of the funk they're in. If I get a daily downtrend with a weekly uptrend, it becomes untradeable for me. So I want, yen pairs to pick a direction. So I'll be keeping an eye on those as well. And the thing with indices that, a lot of them are just between a rock and a hard place. I mean, let's look at any of them. Let's look at the Dow Jones. So, we're at really nice weekly levels. And as you mentioned, this could be the low and that seasonality that you spoke about. This could be the start of a rise in indices. But again, I just can't trade them because, first of all, we're in a weekly downtrend, although we are hitting good support levels. And also, if we look at the day chart, this is potentially a very good selling zone right now. We've got this area of support here. We've got the moving average 20 coming down. If you just looked at the day chart, this could be a really good selling level. But then if you look at the weekly chart, it's a really good buying level. And I'm just seeing this across so many different, indices, currencies, commodities, where you've got these daily downtrends, like this, that are hitting weekly support. So I don't want to sell them, I don't want to buy them. Or you're getting these daily uptrends that are hitting weekly resistance. And again, I don't want to buy them or sell them. The markets are really difficult, levels. And I think we need this news to sort of, choose the direction for a lot of these pairs that I've been looking at and indices.
Yeah, no, I think, Tom, that was really well said, because I've got a chart pulled up here on my end. The S&P 500 very much mirrors what you were reflecting. And you can see we are coming up to what I like to call kind of like a decision zone. We had this huge level of support, right? Price was super bullish. Price came down to this area and was able to break through it. Sellers were strong. And now, yes, we have rounded out what seems to have found a bottom. But now we have this big question mark. You have the S&P 500 sitting at what is definitely a level of resistance, that 4350 mark. Price has been oscillating around there for like 8 hours now, 12 hours now, just kind of bouncing around at this 4350 level, and it it begs the question, is the market just waiting to see what that number has in store for us? And that's why I mentioned, it's somewhat binary for me when it comes to us preparing for CPI numbers. If we get a headline number that shows cooling in the inflationary department, I'm looking to be an S&P 500 bull, very simply because it's like, okay, this market has sold off. We're going into a seasonally strong part of the year. Earnings expectations are pretty low, and any surprises there could really run the market. So there's a lot of bullishness there. But again, it kind of rides on that CPI number that we're expecting tomorrow. On the flip side, if that inflationary number comes in hot following jobs growth that was really strong, I think you're setting yourself up for a very quick drop on the S&P 500. So tomorrow's CPI number, I would say, is really key for indices. Gold, same thing. You could pretty much mirror what I said there, minus some of the earnings reports and stuff there. But seasonally, I think also you don't have the same headwinds. I really or tailwinds. I think really the indices are close on my watch list. And Frank, I want to come to you on the S&P 500. Would you say you're kind of in the same boat? I know I looked at the EDGEFINDER's scoring on the indices specifically, and I was asking myself, what would get us to flip bullish? And you can see where the dead weight on the score right now, it's that inflationary number. So if we were to get a rock star number out of inflationary numbers, or out of CPI and PPI, likely the EDGEFINDER could actually flip bullish on a very quick turn, because again, inflationary numbers coming out cool could offer some support there, and probably that jump in price would likely cause retail traders to get more short biased. So possibly some strength there. It looks like we might have lost Frank. I can't tell if he's still with us, but it looks like his camera froze. So Tom, you're still with me, but I think we might have lost him. I can't tell. He's
no, okay. Yeah.
All good. Frank, don't worry about it. I think we've lost him. He's got some internet outages, but I could speak on behalf of Frank. He's bullish already. We know from earlier in the call that he mentioned he's got the S&P 500. He got it at a great price, pretty much caught near the lows. But a big thing here in terms of this S&P 500 reading on the EDGEFINDER, we're still getting very bearish, but we're so close. And again, to seeing a flip very quickly based on the inflationary number tomorrow. So, Tom, thank you for breaking that down with us, both from a technical perspective as well as a fundamental perspective there. Oh, here comes Frank. He wants to comment. He's coming in the room.
Determined.
Just some connection issues, but all I wanted to point out was the weekly chart on the S&P, and this is what we saw last week, which was some pretty heavy rejection from the lows, and today, or this week, I mean, is kind of showing the same thing. So yeah, from a technical perspective, that's all I was going to say. But yeah, bullish indices.
Very cool. Thanks, Frank. Yep. Appreciate you, man. Yeah,
bye, Tom.
Frank says bye, Tom. Yeah. Again, thank you for breaking that down with us, Tom. I think that was good to get both the technical and fundamental perspective as we prep for CPI and PPI. And I just want to say, Tom has his own YouTube channel. If you guys haven't followed Tom, we have him on the show each week. He comes through to do some technical breakdowns with us. And I think a lot of you guys love hearing from Tom. So if you'd like to hear more from him, he does his own live streams, his own content on his YouTube channel. And we've just dropped his link in the chat right now. So you can click that link. There it is. Subscribe to Simply Forex on YouTube. And Tom, again, I want to thank you for coming on and breaking that down with us.
No problem. Thanks a lot, Nick. Thanks for having us. See you next week.
See you, Tom. Always good to have Tom and Frank on. And again, we had some internet issues. We actually, so network people in the audience are going to just cringe at this, but we have, there is a total of 8 of us in the office, and 7 of us are on Wi-Fi. And the network guy, we've been having some internet outages, and he was like, yeah, you can't have 7 people on the Wi-Fi. You got everybody's, of course, uploading videos, and we've got a staff of people who are very active on the internet. So, anyways, the network guy was like, what are you doing? You got to get Ethernet out there. So we are installing some Ethernet in the office, a little bit of extra behind the scenes information for you guys. The show must go on. And in order to do that, we got to fix some internet issues that we've been having in the office. So again, I want to thank everybody in the audience for being on here with us, joining us for today's show. If you did get something out of it, do us a quick favor, help us by hitting that thumbs up button and subscribing to the channel, whether you're watching on A1 Trading or if you're watching on Trader Nick, our 2 channels here, both of which are being streamed to right now. And again, join us Monday through Friday. We do these shows either 8:30 a.m. U.S. Eastern or 9:30, just depends on what the news is. But you can always come to the YouTube channel and see when the next scheduled live stream is going to be. That way, you know when we'll be live next. But the other great way is just turn the notification bell on, and you'll get notified whenever we go live. Last thing, guys. I got a free present for you. Join our Telegram. If you aren't already in there, you can keep up with Frank and I. Frank does a lot of our written content at A1 Trading, so we're putting out daily chart analysis, and that is totally free value to you. So if you'd like to join our Telegram and you have it, click this link. Again, no strings attached. It is actually a free channel that gives you plenty of value. There are some offers and bonuses that get thrown in there as well. But again, there is genuinely a ton of free value on our Telegram channel where we're sharing trade ideas, analysis, so on and so forth. So join our Telegram. Thanks, guys, for tuning in. Have a wonderful rest of your day, and we'll see you back on the next one. See you guys.
And that concludes today's show. Our goal at A1 Trading is to give you the latest market coverage through our daily videos and articles. If you like what you see, make sure to subscribe for more. Be sure to join our Telegram, where we host trading competitions, share free market analysis with trade setups, and have exclusive discounts to our products. Our Telegram is free to join. The link is in the description. See you all next time.